Hey guys, what's up? It's your girl Mars. I'm back with video number 2, and today I'm actually going to be showing you guys how to read a Forex chart. This is definitely for beginners, but I'm going to be going through, a series of videos that's going to take you from the basics to more moderate to advanced videos. But with that being said, I'm Mars, a 21-year-old entrepreneur from South Florida, and I just started doing these YouTube videos as a way to educate the masses with free information on what the Forex market is, because it is getting very popular. With these videos, I do hope that you enjoy them, and if you do, leave a comment, subscribe, like the video, and if you have any additional questions that I did not answer in the video, feel free to DM me at It's The Real Mars on Instagram. So let's go ahead and get started. Okay guys, without further ado, I'm currently on the TradingView application, aka the TradingView website, because I'm on my laptop, right? It does come on an app on your phone if you don't have a laptop. And I currently have the US dollar to the Canadian dollar, USD CAD, that currency pair open because I'm going to be using this as an example. Now, keep in mind this video is not a TradingView tutorial. I'm going to be coming out with that very, very soon. But what this is, guys, is I'm going to basically go over the chart. I'm going to teach you how to basically read it, and I'm going to show you where the market can go. Very, very simple things. So I have it up right now, right? This is the United States dollar, it's the Canadian dollar. USD is the primary, Canadian is the secondary. Now, it's going to say what the currency exchange rate is right now. It's currently at the price of 1.31776, meaning for every 1 US dollar, it's 1.31776 Canadian dollars. Now, I want you guys to understand that the market can only move in two directions, and that is up and down. So here, the market moves up, right? Here, the market actually went down, went up, it went down, it went up. Sometimes the market can actually move sideways, right? And that's what we call consolidation, right? So up and down. So the market is continuously moving up and down, depending on economic situations, like the prices of commodities like oil and gas, depending on political events like elections or maybe Olympics, and even stuff like wars and other, politics. So basically that's how the charts actually move. Now, guys, I want you guys to understand how we actually make money from trading Forex, all right? So what we're doing in the markets is we're actually buying and selling currencies, okay? Not to get it confused with you actually buying a US dollar, buying a Canadian dollar, or selling them. What we're actually doing is we're predicting where the market is going. So, for example, guys, what we want to do is we want to be able to, analyze the markets to come up with a prediction of where the market's going. So if somebody predicted that the market was going to go up at this point all the way till here, they would have made a lot of money, right? If someone predicted that when market hit this point it was going to go down, they would have made a lot of money. So what we're doing is we're trying to predict the direction of market. So guys, how do we do that? With different strategies, different patterns, different, analytics. So you can either do it on, there's different types of traders. So you can either be a trader where you're trading just based off market structure. And what market structure is, it's just, understanding the language, understanding the story of the market, understanding, the patterns that the market does over and over again. And there's actually some people that trade on indicators. And what indicators are is you can actually add indicators to, your charts. So for example, let me think. MA cross. So MA cross is actually a type of indicator. So what you're going to see, guys, is you're going to see these lines, which is this line right here. This is called the MA cross, right? Or the MA, I'm sorry, I don't know why I said that, the moving average line. So basically it takes the average of whatever right here, exponential moving average, takes the average of the 10 candles previous. You guys don't know what candles are? I'm going to have a video on that too. So indicators basically help a lot of traders that like trading in this style see exactly what's happening in the market, and these are just basically like devices that you put onto your chart that are going to tell you different things about the market depending on what you're using. So there's different ones, and I'll probably make a video on the different indicators that people use and the most popular indicators that they use. But yeah, that's the type of traders. So there's actually another type of way that we can differentiate traders. There's going to be swing traders and scalpers. So what swing traders are, these are people who trade on the monthly, the weekly, the daily. So they're looking for more long-term trades. And then there's actually scalpers who are looking from maybe like anywhere between the 4 hour, the 1 hour, 30-minute, 15-minute, and they're trying to get in and out like as fast as they can because they like watching the market move fast. Now, there is another type of trading that I'll make videos about in the future after I'm done with this series, called high frequency trading, high frequency Forex, aka binary. And those people actually trade on the 1 minute, 2 minute, 5 minute, 3 minute. They're very, very quick, right? And that's a new type of trading that is totally different from what you're going to see in this series. So I will be making a different series on that as well. So back to the lesson. So I'm going to be going on the 1 hour, and one thing I can show you guys today is that the market actually does the same thing over and over again. So when I am talking, when I am telling people about Forex, I do tell them that the most simple, strategies, the most simple patterns that I can show you are W and M formation. So here I see a W, right? And then here I see an M. So guys, what does that mean? You're like, what the hell is a W and an M? So basically, whenever you see a W formation, right, a W formation, that's one of the very simple patterns that tells you that market is going to go up, right? Market's going to go up, right? And what you're going to be doing is you're going to be buying low. So whenever you're thinking that the market's going to go up, you're going to be looking to buy, right? So like I said before, we're not actually buying it. We're actually just putting a position in, predicting where market is going. So if I say I'm going to buy, that means, okay, Mars thinks that market is going to go up. She's going to buy. Now, every time market goes up, you make money because you're on a buying position. So what is an M? It's the complete opposite. Whenever you see an M, you're going to be selling high because you're looking for market to go down. And if you're correct, you make money. So let me just zoom in here because I want to break this down a little bit to you guys. Right here, W formation. So basically, guys, like I said, whenever you see a W, you're going to be looking to buy. So for example, if I took a buying opportunity right here, boom, that's where I would have put my stop loss, like right underneath that low, and take profit, probably would have put the take profit right here. So I don't want to overcomplicate this for people, but that's going to be where my take profit and stop loss is going to be. And if you were in this trade, you would have won just from this W. So basically, guys, you have a stop loss and a take profit. Okay, so what does that mean? So take profit, I'm very visual, so I'm going to do this for you guys. So your TP, or let's say take profit, and traders usually say TP just to save some breath. And what that is, guys, is that's like your wins, it's the price that you set your trade to in order to take your profit. So you have your take profit, and then you have right here is your stop loss. Okay, so what your stop loss is, it's basically your safety net. And what you're doing is you're minimizing your losses. So guys, what a stop loss is it's the price that you want to be taken out if market goes in the opposite direction. So for example, my prediction is when this retest happened, you guys don't know what retest means, my prediction was market was going to go up. And I set my price at 1.3676. I said that when it got to this price, that's when I think that it's going to stop going up, and that's how much money I want to capitalize off of it. Now, what happens if the market actually went down? That means that I would be losing money. But we have something in play called the stop loss that protects your account, meaning that, based on your risk management, whatever strategy you're trading or whatever, plan you're on, because as a trader, you have to have a goal, a plan. You can't be trading, you can't be, gambling. Basically, you have to have some type of plan to how much you want to make or potentially lose per trade. So understand, guys, trading does involve risk, okay? So basically, on each trade, a lot of traders say don't risk more than 2 to 3%, max 5. Some people say max 10, depending on how much you're making, right? There's different things called risk to reward. So for example, on this trade, you can see that the risk to reward was 5, meaning that I was willing to risk, like 10% to make 50%. So that's a really good trade. There's different risk to reward ratios with different strategies that are out there. So you have to find the best one for you. So when I say that some people risk 10%, it's because they're risking 10% to make 30, and they're very, 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 analytical with their trades and very selective with their trades. But, you as a new trader, you probably want to stick to risking only 2 to 3% per trade. Okay. So guys, I'm going to describe to you guys how you actually make money off of these positions or lose money potentially, right? So let's bring this down and let's move this to the side. And let me delete this because I don't want that in the way. So I'm going to put that here. I'm going to put this up here, and I'm going to go over how you actually make money. How do you make money? Okay, so how do you make money? So first of all, guys, we make money based on how many points in the market that the trade actually moved. So for example, from this point right here, this line right there, from this point until this point, market went up 194.5 pips. Let's just say, just to make it easy for math, let's just say that market moves 195 pips. Let's put this on the screen. 195 pips. Let me make it a little bigger for y'all, because I know some people be blind. Okay, so market move 195 pips, okay, and our risk was 36 pips. Now, what does this mean, guys? How does that convert to money? So we trade on things called different lot sizes, right? So there's a micro, the mini, and the standard. I'm sorry if you guys can hear me typing on the keyboard. I like doing things live. So basically what lot sizes are is it's how much money per pip that your trading account is moving, right? And how much you're willing to risk, how much you're willing to lose, how much you're willing to risk, and how much you're willing to make. So when you open an account with a broker. And the broker basically gives you a borrowing power. So depending on how much borrowing power you have, you're gonna know how much you're gonna be able to, put in the market. So that's why, some people can have an account with like $500 and make like $1,000 even though they only have 500, because the broker gives you a certain amount of borrowing power. So here on the micro lot size, what the micro lot size is, it looks like a penny, right? But it's actually 10 cents per point, okay? Which means that on every single, I want to make this simple. On every single point that the market moves in your favor, you're going to be making 10 cents. So on a trade where you profited 195 pips, you would have made $19.50. Now the mini lot size, it looks like 10 cents, but it's actually going to be $1 per point, meaning that you would have made $195, okay, per that trade. Standard lot size, it looks like $1, but it's actually $10 per point, meaning that on that trade you would have made about $1,950. Now it goes on and on. You can risk more than one. This is called one standard lot. Some people, this is another standard, right? So it looks like that, okay, but it's actually 100, and you guys do the math. That's a lot of fucking money. So back to the basics, guys. So that's how much money you can make off those lot sizes, and it doesn't have to be, 0.01. It could be, a micro lot size can be 0.02. It could be 0.03. As long as it has an O or a 0, behind that decimal and then another number, it's a micro lot size. So instead of 10 cents, 0.02 would be 20 cents per point. A 0.03 would be 30 cents per point. So how to, basically calculate what lot size you want to use is you have to take the percentage how much you want to risk. So, for example, if you have a $100 account, so for example, guys, there's actually a website called My FX Book, and I'm giving you guys sauce right now. So let's say you have a $1,000 account, all right, and you want to risk 5%, and your stop loss. Let's look at this trade. My stop loss was 36. I'm gonna round it up to 37 pips. Let's say my stop loss was 37 pips. And you just always keep the currency pair to Euro USD. Calculate. Now it's saying that, 5% is $50. So it's saying that you're going to be willing to risk $50 on this trade. So if you want to risk $50, which is 5%, you want to be putting in a lot size of 1.13. It doesn't have a third digit when you're doing lot sizes. So you're actually going to be trading with a mini lot size, and instead of trading $1, it's going to be you trading like $1.30. If I was risking 3%, I'm going to be risking 30 bucks, okay? So, you know, that means that you would be getting on a lot of 0.8, which is a mini. Is you're trading 80 cents per point. So guys, I hope this was very educational for you. If you learned something new, if you know, you like these type of videos, please comment, like, subscribe, and share to your friends, share to your family members, share to your social medias, tag me. If you have any questions, you know, I'm always available to answer any questions. My Instagram is @itstherealmars, and I'll put it in the description box. But guys, if you have any questions, go ahead and comment down below. I'll do my best to, you know, reply back to everyone in the comment section. But other than that, guys, have a blessed night or day, you know, whatever time of day you're watching this from. I'm wishing all of you guys blessings, prosperity, abundance, success, health, and wealth. So have a great night. Love you.